What's up, visionaries? Today, we're going to talk about the Chainlink Reserve. This is huge news. Chainlink is by far one of my favorite cryptocurrencies because when it comes to cryptocurrency and blockchain technology, it's really important for all of the blockchains to be able to communicate with each other. The thing that I like most about Chainlink is that instead of trying to be either this or that in a binary world, they decide to collaborate with everyone. So what I'm going to do is I'm going to keep this really super clear and sharp. First, I'm going to explain what is Chainlink in plain English, then why it matters for the new world of tokenized money. Then I'm going to get into the strategic reserve. I'm going to explain how it works, why it exists, and what to watch on chain. Then we'll finish with tying this into how to fit this into your portfolio, how much you should allocate, and where does it fit on the 3C method in the tiers. And then I'll let you know a little bit about the risk or the downside. You know, I like to do a little SWOT analysis on everything. Strength, weaknesses, and opportunity. I'm never going to be that person that's always going to tell you sunshine and rainbows. So now I want you to listen for examples, take some simple steps, and I'm going to show you some places you can verify the facts yourself. So with no further ado, let's get into it. All right. You can see my handsome mug down here in the bottom. Right here. Let's go right here in the middle. I know why. So now, what is Chainlink? Chainlink is a secure bridge between blockchains and the real world. I want you to think of a smart contract like a vending machine. It needs the right input to give the right output. By itself, a blockchain can't see prices, bank data, or weather. Chainlink brings those facts on chain in a safe way so the applications don't have to guess. A network of independent nodes checks the data from many sources to cut down on errors. The goal is simple. Apps run correctly, on time, without trusting one middleman. This is what an oracle is. This is one of the most important things for adoption. So now, the key things that Chainlink does, as you can see from this beautiful picture that I couldn't quite fit into that section, but here are the core tools with quick examples. Price feeds. That's lending apps use them to know the real Bitcoin and ETH prices so loans don't get liquidated on fake numbers, right? This is where you don't trust, you verify. This is where the CCIP, which is the cross-chain interoperability protocol, right? CCIP. This is really important, especially with the Genius Act and the stable coins. This lets bank apps send messages or tokens from chain A to chain B safely. I want you to think of this like moving a tokenized dollar between networks. Then this also, Chainlink provides proof of reserves. This checks that a stablecoin or tokenized gold, whatever it may be, is actually truly backed. This is where the automation of smart contracts come from, right? And speaking of automation, it runs jobs on schedule, like rebalancing the vault every hour so humans don't have to babysit. This is going to be really huge for TradFi or traditional finance as it comes into the blockchain, right? So now, why does this even matter? The reason why this matters is because you're going to hear me say a lot about the fourth industrial revolution. We're entering a tokenized finance world. Dollars, bonds, gold, even funds, shares can be live on blockchains. If the data is wrong or late, money can move the wrong way. If chains can't talk, values get stuck. Chainlink reduces these risks by bringing trusted data and cross-chain messages in one stack. That means faster launches, fewer bugs, fewer hacks. So, in less words, less friction for builders, more safety for users. So now, what is the strategic reserve? Chainlink created a strategic reserve, which is just a savings pool held in Link. As the network earns more revenue from users and enterprises, that value can be converted into Link and saved on chain. This is different from a one-time treasury raise. It's a steady system that grows with adoption. The aim is long-term strength, supporting the network across cycle, not just in the bull run. Now, the most important thing is, how does money flow? See, companies can pay in many ways. I'm going to show you a simple flow here. A company pays fees in fiat. That's what the $100 bill is here, right? They pay it in fiat. Then they have stable coins or gas tokens. That's what these three pictures are here. Let me make myself a little bit smaller. I made this picture using AI. So see, they'll pay in fiat stable coins, right? And then Chainlink's payment abstraction takes that payment and auto converts it into Link at a fair market prices, right? So this is one of the things that's going to be really important moving forward about decentralized and how Web3 works. In the old system, you never had any ownership in the network. See, part of the reason why banks have an issue with this, or they struggled with it and was trying to get you, they don't want you in taking their fees. That's how they make their money. That's how they pay their investors and everybody else, right? But, so now, using on-chain tools, services like CCIP can move tokens where they need to go. Automation triggers swaps on approved decentralized exchanges. Price feeds help check the rate. The resulting link is sent to the reserve, which you can see on chain, right? This is incredible, revolutionary financial stuff. And why does that, you say? Oh, let me see. Why is that smart? The design removes friction for big teams. They can budget in dollars, but still pay the network, which then converts to Link behind the scenes. It creates a natural demand for Link as usage grows. So the price will increase on Link the more people utilize the network. It gives transparency because the reserve sits on chain. It can also stabilize operations in tough markets by setting aside fuel for the network, where the bottom line is just it's easier to join, clearer to trust. So now, let me go to my next slide. Where can you see it? You can verify with your own eyes. In the crypto space, well, those of us that do use crypto the right way, we don't trust, we verify. You can verify things with your own eyes. You can check the reserves Ethereum address on the block explorer to see the balances and transfers. You can use the public dashboard for charts and inflow history. Watch for three things though: the total link balance over time, new deposits from conversions, and any withdrawal with time locks. You can also review Chainlink's circulating supply page to see token economics. Transparency is part of the design. So, who's going to use Chainlink? I'm really proud of this picture. Did a good job prompting that thing. So, where are we going to get our money from? Who's going to pump our Chainlink bags, right? The users range from banks, fintech, to DeFi and stablecoins. A bank can update a tokenized fund daily, price using price feeds. A stablecoin can prove its backing with proof of reserves. A DeFi app can rebalance with automation. US companies build on it, made in America innovation, while global teams use it too. Now, let's talk about that. Made in America. You should have some Chainlink in your portfolio because you already see the banks are going to use it. And then I want you to realize this is Chainlink has always been trying to be government facing, right? Because they know that all this was going to be adopted. And this is why I knew. The more I learned about Chainlink, the more I knew that it was inevitable. You see, like I didn't know tokenized assets. I didn't know how they were going to do that. The one thing that I was really big on was just the deeds on the blockchain, right? And then so, you know, like they're going to have different users with the same need. And so you just have secure data and safe cross chain. And that's all you're really going to have. It's not really going to be, but let me tell you, this is huge. If you learn how Bitcoin works, and then you start learning how money works, and then like whether you're wiring money and you're going back around, these are all things that are really important, right? And then so that's why it leads into Chainlink versus just one tool. All right. Some projects sell a single piece, only data, or only bridging. Chainlink offers a toolbox that fits together data feeds, cross-chain proofs, automation, all in one stack, which means fewer vendors to manage, one security model to review, and a faster time to market. For teams that need reliability and fewer moving parts, it's a win. So, see, what is the CRE, the Chainlink Reserve Engine? This is the future engine. This is the Chainlink runtime environment. Think of it like a control room where builders plug in the tools they need instead of writing 10 different connectors. You use one place to route data, messages, and checks, and that means less code, fewer bugs, and quicker launches for banks and big applications. This lowers cost and raises confidence. So this is all being supported by one giant infrastructure. So why the reserves can matter to Link? See, adoption can feed the reserves. As usage grows, more payments get converted into Link and saved. That creates ongoing demand tied to real adoption. The reserves can also help pay nodes and add fund security programs, which protects data quality. It reduces the need for emergency grants, and it doesn't remove risk, but it can strengthen the network's backbone over time. So, what this could mean for you. Okay, this is what the magic question that everybody wants to know. For you, it's about learning the stack and making the calm plan. You're going to track real adoption, active integration, dashboard inflows, and enterprise pilots, not influencer hype. If you invest, consider position sizing, dollar cost averaging, and self custody. Know your time horizons and your taxes, and use facts you can verify and be patient. Now, with that being said, right, what this really means for you is that if you hold Chainlink, whether it's Ethereum, Avalanche, Solana, I can't even think, Caspa, or whichever layer one blockchain they're going to use. It doesn't like, they all the marketing for all these things, that's what people don't realize. Most of these projects are all use marketing. Some use price speculation. Some just wants to call it the Ethereum killer or whatever it is, right? If you want to play that game, the tit for tat game, you just find out which one you want to do. What I want you to understand, though, is that Chainlink, I don't care if you have XRP. Actually, Chainlink and XRP partnered. So whatever XRP does, Chainlink is going to be the one using the data feeds. Now, see, some of those maxis don't want to believe it. That's because when you use price speculation, you don't understand the technology. I'm pretty sure you watched this video and you probably didn't understand it, but that's why I want you guys to leave comments. Chainlink is an oracle. It literally is just linking all the blockchains. That's Chainlink in a nutshell. That when the adoption comes and they all have to communicate, on the back end, they'll be using Chainlink and you're investing in infrastructure. When you're building a portfolio, you don't if anything, you buy altcoins to buy Bitcoin. Bitcoin is the most important. So now, let me go back to Sharon, because it's Karen. Right? So now, you see my little sexy chart that I got here, right? So the 3C method: clarity, confidence, conviction. This is based on a barbell strategy where you allocate your funds. Now, if you all have jumped on a one-on-one portfolio strategy call with me and we actually built your portfolio, you would know that I always try to tell you that you need to have 60 to 70% in tier one. Now, as you can see on my little podium there, I have Bitcoin, right? All these are any cryptocurrency projects that are above $10 billion, right? So now that you have tier one, you have it. All tier one is any cryptocurrency that is above $10 billion in market cap. Now, you're going to hear tons of other influencers telling you market cap doesn't matter and all this other kind of stuff. We're not, if you're just starting out or you're trying to diversify and figure out how this works, right? The most important thing is market cap. I'm going to tell you right now. Like, people will tell you liquidity, which is important, right? Especially when you get into the lower risk one, right? But especially if someone's just telling you how to 5 and 10x, right? What's dangerous about that is when you get down there in those low market cap ones, the tier 3 zone, right? See those little tiny coins I got over here? And there's some AI generated things, excuse me. They're just some AI generated things, but one of the things you need to know is that you need someone to hold your hand because it's uncertain there and you put money in it. Everybody wants to swing for the fences, right? But see, you put your money in big boy number one. That's why the B stands for big boy Bitcoin or Ethereum. You can even put it in Solana. You can put it in XRP. Those are tier ones. These are hundreds or even tens of billions of dollars. Most of those projects. It's hard for those to go to zero, right? That's why I have them in a stability position. Then you have something that's in tier two, right? And tier two is anything below 9 billion or below 10 billion, we'll just say to keep it easy. Anything below 10 billion but above 500 million. Now, there's a huge gap because sometimes now that there's so many cryptocurrency projects and so much money is coming into the market now that the cryptocurrency market was like $2 trillion at one point, and now it's already almost 2.5 trillion, if not more, right? And then so one of the things that you need to start looking for is putting Chainlink in your tier two. So that means based off the general basis of how the tier two growth, right? You would put either 20 or 30% or 40% of your portfolio, or 20 or 30%, I apologize, 20 or 30% in tier two. So any of those projects, and how you divvy it up, I don't recommend anybody have more than 8 tokens. When you're first starting out, 8 is the top because you're trying to condense. Unless you got big boy money, if you only have a little bit of money, stretching your money out and you're only getting like 3x there, right? But if you make 300% on $10,000, right? Because you were tighter than getting 500% on $500. And you stretched it out. You got $500 Bitcoin, $500 in Ethereum. And then you just put so many projects like, I got 10 grand. I'm just going to put 500 in everything. Or $1,000 is what people like to do. Buy 10 projects with $1,000. That's not a good idea. But I don't argue anybody if they say that's what they want to do, right? So now you have 3 high risk, right? So 3 is where you go and swing for the fences. So if you have something like Chainlink, right? You want to look for something that aligns with Chainlink because it's got motion. It has the reserves. You want to be on that. So now, I'll give you a little quick recap here, right? So now, we just filled you in on how Chainlink fits in your portfolio in a tier 2, right? So then I want you to realize that this is education and not advice, first of all. So now, Link is a tier 1 today because his market cap is over $10 billion, right? So you're going to treat it like a blue strip infrastructure, right? So you can even put that in tier 1 if you want. But I really think that it's a tier 2 at the moment right now. Right now, it just has a ton of steam. But I'm telling you, Chainlink can go to like $100 billion, like overnight too. Like what I'm telling you is that Chainlink people think is slow, but you could take profits, realize it, ride it out. Chainlink pays because it's so stable and secure and it's volatile, but it goes down 10, up 10, down 20, up 20. And it does it frequently, like 4 or 5 times a year. So you always got enough time to jump in, right? So now, it's a little bit different from Bitcoin and Ethereum. It's built on Ethereum, right? Bitcoin's a store of value. ETH is a smart contract base, but working alongside them. Watch the catalyst, right? More proof of reserve, more users, more CCIP traffic, more reserve inflows and enterprise launches. Now, that may sound like a bunch of fancy words, but when you hear those things and you want to buy some Chainlink, that is called merit-based news. When you hear them talking about the CCIP, when you talk about the proof of reserves, the reserves inflows, and the enterprise launches. So that means enterprise launches is when somebody big, like a Bank of America or somebody, starts launching stable coins and using Chainlink. The price is going to go up. That's the whole point of this video. The reserve is going to pump Chainlink's price up a lot. So you got to watch for the risk, though. Competition, right? So the competition is in one. I don't want you guys to misconstrue this. The Ripple Ledger and the RUSD. But Chainlink isn't solely relying on that, right? But it can be competition in a way. And then there might be some other blockchains that people decide to use, especially, but not in America. China and other places, they may want to use it. And this is what but what I'm telling you is America is where all the money's at now, right? And then that may switch sometime later, but not yet. And that's what I want you guys to know, is that we're playing the long game here, but you're going to make money on the way on Chainlink. So now, Chainlink is the data, the messaging bridge for tokenized finance. The strategic reserve turns revenue into Link and saves it on chain. It's easy to verify. Link sits in tier 1 by market cap, but if you can explain that to a friend in 1 minute, you got it, right? That's it. If not, replay the parts on tools and reserve. So now, I want you guys to start learning. Be more. I'm gonna make more videos and be more active in here because it's important that you guys get involved now because it's all money in time. It's time to make some money. And that when I say all money in, I can't believe I just said that on this video because people exaggerate when you say that. Doesn't mean throw all your money in at once. I mean that you got to start being diligent about your targets when you enter the market, if you got 20 G's on the side, you need to break down how much you're going to try to invest in the month. You got to deploy it, because no matter what, I can't tell you when something's going to pop, right? I can only tell you what's good. If I knew when it was going to pop, I wouldn't be doing this. I'm not like, if I knew it was going to pop, I'd be out there on the Cayman Islands chilling like a villain at the same time. Well, guys, this went longer than I wanted it to, but I hope this guy's provided some value to you. If you have any questions, if you have any other thing that you want me to break down like this and make a presentation for, please let me know below in the comments, guys. All right? As then, I want you to not just survive, but thrive in the fourth industrial revolution, guys. And you guys have a good one.